Hello traders and welcome to another video review. Today is Monday, August 28th, 2023. Let's find out what is going on the Forex economic calendar today. Retail sales data from Australia were better than expected. It jumped from minus 0.8 to 0.5%, beat the expectations of 0.3%. Not too many data scheduled for release during the London session. We got German Buba President Nagel's speech at 2 o'clock, and then again the German Buba Balz will give a speech at 6 o'clock. 2-year note auction and 5-year note auction are scheduled for release at 7 o'clock. Of course, those note auctions are from the US. As you can see, the calendar for today doesn't look very busy. It's very moderate. So in that situation, there's nothing else to do but the review of the major Forex pairs. And we are going to start with euro dollar. Euro dollar for our chart looks bearish again. However, there is a very interesting candle made on Friday, which has a big upper and big lower wicks. So right now the market might temporarily pause the downside movement and bounce a little. Nevertheless, this big head and shoulder pattern that actually works very well right now is still not completed, so we should have the extension to the downside below the low of 1.0766 towards the swing low from the last day of the May, first day of the June 2023, located at 1.0636. This is the ultimate target for the bears. This is the target measure from the head and shoulders pattern on the 4-hour chart. Let me just give you guys some kind of a perspective how it looks like from the bigger point of view. As you can see, pretty nice, a little bit skewed to the left side head and shoulders pattern. We are still moving lower. This pattern terminates this up move and might indicate the deeper movement to the downside in the euro dollar, especially that the last time this market was above the level of 55 on the RSI was apparently roughly around the August 10th 2023, when this right shoulder spike was made. Since then we keep making lower lows, we keep making lower highs, so the definition of the short-term downtrend is intact. And as long as there is no very dynamic and aggressive breakout above the red line is of course the technical resistance 1.0835, we cannot change the outlook to more bullish, because for this there is no reason for this. All right, so euro dollar moving lower. What is going on the British pound? Situation is almost the same. Please take a look. Almost the same candle. 4-hour candle was made on the British pound chart as well. Big wick to the upside, big wick to the downside, as you can see here, touching the 50 periods moving average and making the new local low at 1.2547. Of course, now we are bouncing a little bit from the extremely oversold conditions again, but the momentum is still negative. The momentum is still weak. So another movement to the downside should be expected. This level here, 1.2620 might work as the technical resistance here, and even the level of 1.2615 might still work as the technical resistance. So the overall situation here is rather bearish for the British pound as well. You might see almost the same pattern here, like a kind of a head and shoulders as well. So these two markets, British pound and the euro dollar, are highly correlated right now, which means the main driver behind the recent moves on the cable and euro dollar is the US dollar strengthness, not the weakness of these two. So that's a very important information as well. So we got this movement here as a kind of a right shoulder that was made towards the level of 1.2790. 1.2790 is the local high. We are still trading below this trend line here, mark as orange. We are trading below 50 100 periods moving average. We are trading below the key technical resistance in during the negative momentum, weak momentum. So the outlook remains bearish, and even the lows from the end of the May 2023 might be hit at 1.2307. They are not that far away. Roughly from that low, it's only 240 pips. So please keep an eye on the British pound. The outlook on the British pound remains bearish. What else we can take a look at is the US dollar to the Japanese yen. Let me just refresh the charts. So US dollar to the Japanese yen. Let's take a look at the daily time frame chart, because we recently looked at this on the 4-hour only. So on the daily, as you can see, this big movement here, it's not quite that much impulsive, because there is like a wave overlap, if you want to label it as the impulsive. So of course what you do is you take this low and you take this high as the wave 1, wave 2, wave 3, wave 4, and possibly wave 5. Okay, if you leave it at here, you can see that wave 1 and wave 4 overlaps a little bit, but it's still kind of a overlap. Otherwise, it looks perfectly like a textbook example of the impulsive wave. And the target for this, from the technical point of view, not from the Elliott wave point of view, but the target here would be at the level of course, 151.96. So there is still some kind of a room to the upside. We got the bearish divergence on the daily, so divergence between wave 3 and 5, and the momentum on wave 3 and 5 is clear and visible. So we got the bearish divergence, so we should start some sort of the movement to the downside quite soon. We got the technical resistance roughly around this level, as you can see here. This level was the technical resistance, and the technical resistance was broken, tested. First, it worked very nice as a charm, top for the wave 3, and then correction, then the breakout test, and now the market keeps moving higher, Let's find out what's going on there. The market keeps moving higher on the daily time frame chart. Okay, so that's the low for, let's say, wave 4. Let's remove this wave now, because we don't need them anymore, and we are still fighting and struggling with this level, 146.57. okay, we've been here last week and there was no breakout. We've been here, sorry, 2 weeks ago, last week, no breakout, and today again there is no breakout yet. The momentum is still strong, the momentum is still positive. However, as I said, there is a bearish divergence here, so please keep an eye on any violation of the recent low when the market will start to reverse, okay, to the downside. 144.55 is this low. Right now the moving average 100 days moving average provides 50 days moving average provides the technical support. Of course, if we break below 100 periods moving average, the outlook remains would change to the bearish. The other pair I would like to take a look at is the US dollar index. Let's take a look at the US dollar index. This is daily time frame chart. As you can see, from the lows around the level of 100, the low was actually, technical low was 99.55, into the extremely oversold condition. Haven't seen this year. That's the first time this year we have seen this kind of oversold conditions. We bounced straight to the overbought conditions, and as you can see, very nice rally for the half of the July, the all of the August. It's 28, so it's almost the all of the August was made basically towards the last high located at 104.42. so the recent movement to the upside, let me just take a look here, was apparently how many percent so far? Almost 5%. almost 5% rally. That's nice. The rally of the US dollar across the board against the basket of the currencies. Very nice rally. So what else? Now we should of course take a look here at the technical resistance of the last high. Last high technical resistance, last swing high level 104.67. So not that far away. The recent high was 104.42, so not that far away at all. And any breakout above the swing high will break right now, violate the lower highs, lower lows rule. So this would be the first indication of the trend change. Longer or midterm, for example, midterm change from bearish to more bullish. So this one is the one to keep an eye on. Okay, we might now see some kind of let's say correction towards even the moving average around 102.84, 102.72, somewhere there, but then we should bounce and move higher. So the euro dollar and British pound should move lower, and if this is a valid cross of the 50 crossing the 100 periods moving average on a daily time frame chart, maybe the last cross was here, so maybe, and you know, it lasted for months, so maybe there is still a room to the upside on the US dollar index. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.